Hi, I'm Asif Farouk and we're here at the Accenture Innovation Hub in London, and I'm speaking to Jeremy Light of Accenture about payments innovation. Jeremy, thanks for joining us. So, payments innovation is a very hot topic right now, but what is there really to show for all the investment being made in it?
Well, at the moment there's not a lot, and I think there's two reasons for that. One is there are a lot of innovators and new entrants who are new to the payments industry who don't really understand the complexities, things like finality, settlement, liquidity, risk and so on. And on the other hand, you've got those who do in the banking world, who do understand payments, but they're less accustomed to innovate and to innovation. And that's reflected in my second point, is that typically payments is in two parts. One is the payment initiation or order, and the next is the settlement, the interbank settlement, or in the cards world, the authorization and the settlement. And most of the innovation is on the payment initiation side, but the innovation in the interbank side hasn't really caught up. So, for example, if you want to pay a payment through a mobile phone from one bank account to another, unless you've got real-time settlement, the user experience is pretty poor. So I think overall, the two sides of the industry are not in harmony yet, and until we get to that point, we're not going to have industrialized innovation and lots of new ways of paying.
And so what's really the future of payments in your opinion?
The way I see the future is that innovation is driving a proliferation of new payment methods. The industry is becoming more fragmented, and this is leading to what we call polymorphic payments. So what do I mean by polymorphic? I think it's three things. One is the ubiquitous use and acceptance of a proliferation of payment methods and types. Secondly, it is a consistent user experience, regardless of the payment type, regardless of the platform, regardless of the settlement method, regardless of the destination account and so on. And thirdly, it is a change in the way that the consumer experience is constructed. So whereas before, or traditionally, the consumer experience or the customer experience has been driven by the payments process, for example, credit cards when buying online, but that will move to the payments process will now need to be tailored to meet the customer experience. So whatever customer experience is desired by a merchant on their apps or e-commerce sites, the payment process will be tailored to that.
So what does polymorphic mean for banks? What are the implications?
Well, there are three implications for banks in the industry. One is banks need to think polymorphic payments. So that means digitally enabling bank accounts to work all payment scenarios, whether it's online, mobile, at point of sale. And from a merchant acquiring point of view, merchant acquirers need to have polymorphic services where they offer multiple payment types, both cards and alternative payments, and also for not just monetary value, but also for non-monetary value to be integrated into the payment experience, such as loyalty, rewards, offers, coupons, discounts, etc. The second point is banks need to expose their core payment systems through APIs so that developers can embed those APIs to make payments, request refunds, request balances, etc. in merchant apps and merchant applications, whether online or at point of sale. And the third point is that the banking industry needs to implement much more real-time and information-rich infrastructure, such as we have here in the UK with faster payments and G3 in Singapore. So, in my view, there's a lot of transformation still to happen, a lot of innovation still to happen, and it's very exciting.